Stock market panic set in today as Wall Street fears of COVID hitting the economy again set in. Today we're going to talk about what happened and why it could point to a bigger problem down the road that isn't being talked about. Let's get into it. Today's action in the stock market was a bit of a wake-up call for some people. The Dow plummeted more than 2% before the market closed today, making it one of the worst days so far this year for the stock market. Now, one of the biggest problems with the stock market these days is that it is driven more by a narrative than by fundamentals. We have some serious problems in our economy right now in the form of supply shortages across so many industries, and yet the market has kept making record highs on a regular basis. A stock market that is surging based on a narrative can crash on a narrative even faster. You need to have the fundamentals underneath it to have some confidence in it when it comes to your investments. Because of this, I recommend extreme caution for everyone invested in the stock market right now, especially if you're not investing for the long term where you'd be able to ride out a major market correction or downturn. But there's a bigger problem underneath today's action, one that I don't hear many people talking about. Here's what I'm specifically worried about: persistently higher inflation. Here's how it goes. If the markets are right now, which in of itself is a dubious proposition sometimes, then a slowdown or another downturn in the economy is on the way. The stock market is worried about COVID cases climbing, which could hurt the economy if we see restrictions on businesses put into effect again, or if businesses voluntarily shut down or otherwise limit their capacity. The bond market has been confirming this the last few weeks, with lower rates on things like the 10-year Treasury because it is predicting continued low interest rates in the future, which the Federal Reserve would pursue if the economy was weak. But here's the problem. If the COVID restrictions are put into place again and we see another contraction in the economy, the government is then likely to do what it did before: massive stimulus, and the Fed will print the money to fund it. The news we're hearing about today about inflation these days is precisely because aggregate supply in the economy is lower from the 2020 shutdowns, and demand is high because of all the stimulus and easy monetary policy. They created a situation where there's too many dollars chasing too few goods, a foolproof recipe for inflation. If it happens again, will be even worse because the supply and demand across so many markets still have not returned to equilibrium from the last shock. Here's what we're going to be looking for going forward to gauge that scenario. First, as COVID cases rise in different parts of the country and around the world, are we going to see restrictions on businesses put into place again? Here in California, where I am, we're already seeing the start of that. Los Angeles County recently reimposed mask mandates, and several counties in the San Francisco Bay Area are recommending masks be worn indoors. Now, masks don't affect economic activity per se, but what we're really going to be worried about is if capacity restrictions on businesses are reintroduced. I'm not a health expert, so I'm not going to weigh in on that side of things. But as an economist, I can say if we shut down businesses again, we're going to be dealing with some big problems over the next year or two as a result. We're still getting over the shutdowns from last year. Second, if restrictions on businesses are reimposed, will we start seeing layoffs again? We'll know that pretty quickly from the weekly unemployment insurance claims data as we move forward. And third, will the government enact more multi-trillion-dollar stimulus measures to try to prop up the economy? If that happens, then the probability for persistent higher inflation will greatly increase, as supply chains will be further disrupted, even as demand is ratcheted up from a bloated money supply. So we have a lot we'll be watching. The scenario I presented is not a reality yet. But as things play out over the next month or two, we'll have a better sense of where things are heading. Make sure you're subscribed here and hit that notification bell so you get notified right away when our next update on this scenario comes out. We'll be staying on top of all this for you. Think of us as your personal consulting firm that you don't have to pay. But if you could hit that like button and share this video with others, it would help us out a lot to grow the channel and keep bringing you important updates like this. I'll see you in the next video.